Ladies and gentlemen, good morning. We're happy you could join us for HansaMatrix Investor Webinar. Today we are hosted by HansaMatrix Chairman of the Management Board, Jānis Sams, Management Board Member and Finance Director Māris Maciejevskis, and Founder of Lightspace Technologies, Ilmars Osmans. We will start with the presentation in HansaMatrix and its associated companies, Lightspace Technologies business update, and continue with a live Q&A session. If you would like to join the discussion or ask your question to the companies, please use the Q&A section underneath the presentation. Gentlemen, I'm handing it out now over to you.
Thank you, Eva. So welcome everyone who has joined Nasdaq webinar for HansaMatrix for Q3 and first 9 months result. Today, we will review the business operation financial highlights. After that, Mr. Maciejevskis, the CFO of HansaMatrix, will dive deep into the details of financials. And before switching to the Lightspace Technologies, we will be happy to answer your questions. So, business operational. What we see is that semiconductor availability is improving as the market demand decreases and suppliers were being able to increase their capacity. What does it mean in figures is that worldwide sales of semiconductors has been decreased by 3% compared to the third quarter of 2021. And if you compare to last quarter, so Q2 of 2022, it's even higher, 6.3% decrease. And that gave us the chance to decrease our order book. As we can see, our order book has decreased to 19.2 million. This is 12% down compared to the previous quarter. And for sure, our customers are happy to receive finally the products they are waiting for that long time. But unfortunately, inflation, especially in energy prices, influence margins, so it's making us to continue closely follow inventory and cash flow. Next. Yeah, so we can be proud that our Q3 revenue has been highest in all history, so 7.6 million euro. And that is 44% increase compared to the Q3 and 16% compared to the Q2. Overall, if we see the biggest players in the European EMS business, so their revenues are quite high as well. So normally they are between 30 and 50% higher than their result in the previous quarters. Nevertheless, we need to mention the EBITDA level is pretty low. So for the same reasons I explained in the first slide, and this is 5.7% of EBITDA margin. And yes, so I just can repeat that the margins decrease are mainly impacted for the product portfolio. So the orders of the high added value are decreased, but in the revenue they are compensated by the products that has a lower added value, and the energy prices and FX are two other aspects that influence margins. On the comparison with the peers, so the enterprise value to EBITDA multiple is 8 versus 11 peer average, and as we can see, still the same remarks on the EBITDA that for the TTM EBITDA margin we see 8.3%, comparable low to other peers. But I would like to highlight that the September EBITDA margin is 11.47, and if we are following the HansaMatrix reported guidance for 2022 and 2023, we can see that those improvements are continue to be in the further months as well. Shortly on the investments, the ones who participate last time, so we usually update on the investments, our equipment. And we have been investing around 60,000 in our machinery in Q3 and 200K in 9 months. And from the planned largest investments, we physically already has received our X-ray machine. And in coming weeks, we are going to receive all our CNC turn machines. So this gives us, let's say, mandatory to fulfill the mandatory requirements of our customers to serve them with such a services as the X-ray. That's very short all on operations and business. So I give a mic to Maris to go into the details of the financial result. Thank you.
Yeah, thank you, Jānis. Hello, everyone. So I will dive a bit deeper into numbers, how we looked in Q3 and in 9 months as well. So as Jānis mentioned, in third quarter of this year, we reached historically highest revenue of 7.5 million euro, which resulted in a 44% year-over-year increase and 16% increase as compared to the second quarter of this year. So in this quarter, 3 main regions generating revenue were Baltic states with 37% of total, Nordic countries with 31%, and the rest of EU countries with 26% of total. Services provided to outside EU countries this quarter were 6% of total revenue, and revenue on year-over-year basis was mostly growing in Nordics and the rest of EU countries. Largest revenue sectors in the third quarter were industrial with 51%, data networks with 29%, and IoT with 12%. Optics and photonics and other product sectors together generated 7% of the total revenue. And the increase in revenue was concentrated in industrial, IoT, and optics and photonics sectors. This quarter, the reported EBITDA amounted to 430,000 euro, decreasing by 47% on year-over-year basis, but staying at the same level as in Q3 2022. Net profit was negative and amounted to 560,000 euro, and third quarter normalized net profit, which is adjusted by key non-cash items, was almost positive, indicating improvements in component availability. EBITDA margin this quarter was 5.7%. And on a positive note, in September, EBITDA margin started to improve, reaching more than 11%, which was determined by growing revenue with slightly better component availability. So going further to 9 months, in 9 months we reached historically highest 9 months revenue as well, which on year-over-year basis increased by 18%. And the increase in revenue is explained by strong order book and some improvements in component availability. In 9 months, the revenue was mostly concentrated in Baltics with 40%, Nordic countries was 28%, and other EU countries was 26%, and 6% of total volumes were delivered to outside EU countries. The most significant growth in revenue in this period was in Nordic and in other EU countries, which was mostly related to good performance in industrial and IoT sectors. And revenue decrease in Baltics and outside the EU is mostly explained by the global component deficit challenges. Then in 9 months of this year, largest revenue sectors were industrial with 49% of total, data networks with 30%, and IoT with 13%. Optics and other product sectors together generated 8% of the total revenue. And in this period, revenue was growing mostly in industrial and IoT sectors, while that data network sector revenue decreased. So profitability results in 9 months, EBITDA level reached was 1.7 million euro, which was still decreasing by 50% on year-over-year basis, and resulted in 8.3% EBITDA margin. Net loss result was 1.3 million euro, and is mostly explained by unusually a low high value added product proportion in manufactured product mix due to global component deficit, and also by EIB loan provisions and losses from associates. Normalized net profit for 9 months was nearly positive. And looking at last 12 months results, the revenue level reached is 25 million euro, and EBITDA 2 million euro, with EBITDA margin 8.3%. Net profit in this period was negative and was significantly influenced by Zinātnes Parks investment project provisions in amount of 1.4 million and other non-cash charges related to EIB loan and associates. The calculated normalized net profit for last 12 months was also negative and was impacted by the product mix and component deficit. But as mentioned previously, we see significant improvements in profitability margins starting with September as revenue volumes increase. And yes, that concludes the numbers in detail, so we can tackle questions now.
Thank you for the presentation. We have received one question addressed to HansaMatrix prior to the session, but we will also be happy to answer any other questions that you might have. Please use the Q&A section to address them to us. So the first question that we have received in regards to HansaMatrix: is there a pressure on cash reserves because of higher inventory requirements due to component shortages?
So I can take the answer, Mars. You are muted. Yes, so probably I already answered the question during the session, and sure the inventory levels are high, and it's mainly because of the longest lead times we saw in the beginning of this year and in the end of the last year. And the way to live through those difficulties, of course, we are looking for the different instruments, and we are using the debtor financing services and as well the overdrafts to live through those difficulties.
Thank you. The second question: for what time period is the order book value estimated? Or if assuming normal conditions, in what time period the orders would be executed?
You know, this around 90 million we mentioned in our order books, this is actually unusual picture for such an EMS as HansaMatrix to see that far away in the future. And in the normal situation, we should execute those orders within 6 to 7 months.
Thank you. Is it possible to improve EBITDA margin, and what is your plan how to do it?
Yes, for sure there is an opportunity to improve the EBITDA margin, as we can see as well in September, and further you will be able to follow the performance of HansaMatrix. So we are planning to recover the EBITDA margin, and there are two main let's say activities we are working on, and one of them is the productivity, so the labor productivity, lean manufacturing tools implementations into the operations. So this probably is covering 2 to 3% roughly. This is my estimates. And for sure there is the negotiation on the prices with the customers, as those fixed costs as the energy is going up. So partially we share this increase of the costs with our customers, and this is the normal approach. This is what other EMS are doing today.
Thank you. Participants would like to know more about Zinātnes parks. Could you please elaborate on the future plans for Zinātnes parks?
Mari, will you answer, or I should take the question?
I can, yeah. No, yes, for Zinātnes parks, as we have secured manufacturing premises in Ventspils, and also we have some spare space in Ogre. The plan is actually to divest this property at the moment, and we are actually in the process of carrying out the sales of this property. And let's see how it goes, because of course the market now is not very attractive, and investor confidence, you can say that it is low sometimes, but let's see how it goes.
Thank you. You state that the semiconductor situation is improving, but data network segment has been performing worse over the quarters this year. Why is that?
Let's imagine that the semiconductor issue we face for more than 2 years now, and this improvement on the semiconductor is very slight. As I mentioned in the figures, it's only 3%. We can say it's starting to stabilize, but really to feel the improvements coming from this component availability will follow, and I believe we will be able to see it in coming 2 quarters as well in network connectivity market.
Can you please comment more on component availability and the profitability of the sales mix? What are the movers that we need to think about?
Again, if we are looking from the EMS perspective, then normally all the RFQs we were being agreed with our customers are based on some fixed component price, and normally the increase of the components or of the bill of material are often transferred to the customers, and it shouldn't impact really the profitability. That's one point. And the other point we need to mention for the future, it's the forecast of other big players in the market, is that we could see a small decrease in the product demand or service demand in end of next year. So because the assumption is that our order books, not HansaMatrix, but overall EMS order books are overbooked. So just because of this situation that components were not been available, people have been placing orders without the end customer order behind.
Thank you. The industrial segment has significantly reduced profitability. Is the segment profitable on its own?
Sure it is. But in our case, this industrial segment is representing one new customer that is generating pretty high revenues, and because of simplicity of the product itself, there is very little variation. we have a competitiveness in the margin, so we cannot have a high added value on such a simple products we do have. But as the bill of material is pretty expensive compared to the added value, we see high figures in revenue, but it's not reflects to our EBITDA margins.
And then we have a follow-up question regarding net loss. Could you please elaborate what drives the net loss more specifically? Is it mainly the reduction in gross profit due to production of cheaper products? EBITDA is positive, but depreciation is a significant cost item.
Aris, will you take this question?
Yes, we can say that maybe three key influencers. The one is in general revenue level, and this is one which comes together with the product mix. Since some of the products are with higher profitability, and we have not been able to produce them in significant levels due to this component deficit. So this is one point, and the other points are, of course, these non-cash charges that we are having from provisions related to EIB financing, and also from recognition of losses from associated company. And therefore, also we calculate this normalized net profit, which reflects, let's say, our net profitability as if we would operate only on a pure EMS company basis. But yes, as we mentioned, and as we mentioned also previously, that we see that starting with September, the profitability levels significantly improve as revenue is growing, and also product mix is changing to a bit more favorable. But also in a general comment, I mean, if we look at let's say peer average EBITDA margins, we are still not let's say in okay, we are maybe at the lowest range, but we are still not falling out of the average market with such EBITDA levels. It's just historically we have had these extraordinary high let's say EBITDA margin levels, which we hope, of course, that we will be able to show in the coming year or two as well. But it really depends on these three things, like product mix and also non-cash charges that we are having at the moment.
Thank you. The recently announced Baltcap voluntary share buyback will potentially make HansaMatrix in compliance with NASDAQ official list requirements. Do you think this is more possible to be on a different list, or is it likely for HansaMatrix to delist its shares?
I think overall we for sure expected the questions about the Baltcap offer, but I don't think that we can elaborate in this session much about that. So I think that the information will follow, and of course it will be published.
We have a follow-up question in regards to the expected timetable for the Baltcap offer. Is this something that you can comment?
I think that there are some homeworks that are still in process, therefore we are not able as well comment on that.
Yeah, this is, I think, more question to our potential shareholder. But of course, if you look at the information we have published, that some time frames were mentioned there, as for example, the 1 month of this competition authority approval. So you can make some guesses about that, but of course, how fast will the offer come, we don't know, and this is the question to Baltcap itself. But as I mentioned, you can maybe do some guessing based on the information which we published.
Thank you. And now, before we are turning to Lightspace Technologies presentation, there is a question: what are HansaMatrix future plans for Lightspace Technologies?
So I think those two questions what we see still are not answered, and they are very linked to the next topic as a story about the light space. But what are our future plans as the HansaMatrix? So we are continuing to still support Lightspace by manufacturing the PC base and some enclosure parts for the product. And we are continuing to do that as well in 2023 when the volumes will start to increase.
Thank you. Ilmar, we would now like to turn or give the floor to you and your presentation.
So hello everybody. Microphones, hope you hear me.
Yes, perfectly.
Yeah, okay, thank you very much. Can someone turn the pages now, please, for me? Okay, I'm on the first page. Okay, so I don't see that. Okay, how can I get it large? Eva, can you make this presentation so I can see it? I'm not sure which page I am on. Okay, I take mine. So let's say I'll try from my memory. So you just have to change the pages. So business development. It's been going quite well. Lightspace started to sell its new product in summer. We've been already out with the product. We delivered first like 5-10 units as a sold unit. And then we are having also a number of units out with as a demo units for testing, trials and validation. One big medtech already placed orders for headsets, and we are having also negotiations with next 3. We have moved into new premise, so manufacturing been consolidated in one place right now. It's still difficulties in manufacturing phase because the first product, of course, it has a little bit. Design is not kind of, as you understand, have not full, but there's a number of bugs in there. So this been fixed, and product will be upgraded to next model 1055 already in December now. It's been regarded. We are doing lot of demo work with customers. Been regarded as the best product currently. We visited one middle-size med tech company who were using Magic Leap product so far, and when they saw ours, they started to tell us all things which are wrong with Magic Leap and which are right with our product. So we are thinking, having right now received very big sales win, I think, very soon. Then next page maybe. At R&D, we finished our SME accelerator, AC accelerator project, where we are, okay, now I'm saying everything. Okay, where we reported all activities. We received expert evaluation from European Commission experts that results are exceptional in this project, and we received last payment. We are currently working together with one of medical partners in UK on new project that will be funded by Innovate UK. Once it will be approved, we'll announce that. Then other news this quarter, also new R&D funding round being approved. Latin Competence Center program. This is the program we are working also with our projects. That's regarding R&D news. Can you turn next page, please? Funding, it's very important right now. The fact is that the market we were looking at, like private placement market with SPACs and CPCs, actually collapsed during this year. And in Q3, you could see clearly the level of collapse or depth of collapse. So we have postponed listing process, but based on the fact there is no any reason to go there. I believe in 12 months it will be different. So instead of going to the listing process, we launched alternative Series A fundraising round, talking mostly to family funds and several VCs. As well, if anyone listens here and is interested to participate in bridge funding or on this Series A upcoming Series A round, please welcome to contact us. And I did mention first point here in news that bridge round continues, because we continue to operate and need funding. So it's been extended to 3 million now, I think, through the Q3 and beginning of Q4. And next page, please. Listing process, yeah, as we say, update on listing process. There are many questions what is happening with listing process. As I say, because of the situation in that market, that exactly this SPAC and CPC company markets on Nasdaq and Toronto exchange collapsed. Really, valuations are extremely low. There's no any point currently go there. You have to wait a moment when they start to grow, then it's exactly timing. So we are ready. We are monitoring situation, and once it will be positive, we could go there. Lightspace has started fundraising process from private funds and looking for a next round, $15 million new capital. And usage of those funds will be exactly what we need, which is business development, ramp up of manufacturing, and further development of technology. It's quite very general. Otherwise, we are good. I think is this last slide? Yes, thank you. So expecting questions, please.
Thank you. There are indeed a couple of them. Can you guide for when Lightspace will be profitable, meaning not burden HansaMatrix bottom line?
Again, saying this is not cash item for HansaMatrix, since HansaMatrix is not contributing with a cash, at least last year. But this is cash being attracted from fundraised from private currently from angels, and we're looking to involve larger family funds and VCs now. And we are expecting, of course, we need to start to sell. We need to start to sell like 1,000 headsets, 1,000 or 500 to 1,000 headsets a year, which according to our plan will be in 2 years. Then we are becoming EBITDA positive. That's about answer. Currently, as I say, we are selling. We just starting to sell. We are selling like around 3-4 units a month. That just leads to maybe 50 units if you would count through the year. So we need to increase that tenfold. But every month we have new inquiries, so it's step by step going up.
It was previously mentioned that 5 up to 10 AR sets have been shipped to customers, and the question is rather a kind request to verify the terms try and buy, the set KPIs, or just try and write to return.
What the terms are? No, we are really shipping final, most of them, because those customers already seen the product and validated that fits there. We have one in Korea, then we'll ship like well, let's say we have offers following rent and buy, which is kind of we ship with the rent terms, so you pay for the time you use. If you're happy, you pay the rest, and it's yours. You know, that's it's like we could say lease and buy terms, especially when it's far away and we really don't have good opportunities to do full validation test before. If it's easy accessible, so we ship demo device, they test it, and then we do deal final. We just sell it on a standard terms.
Thank you.
But you have to understand this is early product, so we are very flexible towards customers. We are if there are anything which they are not happy, we are replacing or we fixing or we improving product as well. On some occasions, when it's broken, of course they pay and we fix it. But in a principle, we are having really hands-on feedback of the usage of them. We really need that.
Mm-hmm. Are the lead investors participating in the bridge financing round?
Not really. Well, no, I cannot answer to maybe someone who is in bridge round might become a lead, but so far the ones I think will be lead ones are just in discussions currently in kind of more theoretical phase of the. But we have several which already is in due diligence phase.
Mm-hmm. And who is the bridge loan provider?
Bridge loans are provided. Bridge loans, these mostly are convertible. Convertible loans are provided by private individuals or businesses, which act as angel investors currently.
Mm-hmm. Thank you. And another follow-up question with a nice business idea. Have you considered such approach as product as a service to establish recurring revenue?
Mm-hmm. That's been discussed. Our model will be, let's say, for a use case where we are supplying this. This is healthcare. This is regularly used product. You're using that, putting on head, taking off. It's not a kind of, it's not a thing you buy for demo or just for trials or just for curiosity, but you buy it as for heavy duty work. And we believe that once you buy it, the use period of this is maximum 24 months. So in 24 months, if it works well, you will sell new one to that user. So there is no really, if the period is such short, I don't think there is issue on rental. The rental might not work, or we can make one, but it a little bit depends on our partners. We are partnering up with big names in healthcare, on the medtech, and they are the ones who will probably define business terms. So it's a bit too early to really give any final, but currently model is based that we have 80% revenue based on sale of hardware and 20% of selling of service maintenance of these units.
Mm-hmm. Thank you. No more open questions, but we have a thank you message to all of you gentlemen for the open insights.
Thank you very much.
I'm happy we have had an intense discussion. We hope that means that we have had a valuable hour spent together. As always, we have recorded this webinar, and the recording will soon be available in HansaMatrix announcements. So please follow HansaMatrix News to stay up to date. Thank you to the speakers, and thank you for participants for joining today.
Thank you.
Thank you, everyone. Thank you, everyone. Have a good day. Bye.
Thank you.